Short-term rentals are better than long-term rentals, or are they? What I want to do here is break that down. So I hear a lot of times that short-term rentals are better than long-term rentals who make way more. Well, do you? Is it better? Is it more flexible? Let's take a look at that. So we'll take the same property and analyze it in two different ways and break that down and talk about it. So let's start off here with, I don't know why I picked Sunrise. It was the first place that came to my head. Never been there, but let's analyze this property here with a pool. Okay, we'll create a new deal. Real estate, we're gonna put in and extract that data from the property. Okay, here we go. All looks reasonable. Single family, $9,000. Do we want to include HO? Yeah, we'll just include it. All right, so we'll apply to the form here and we'll get going. So purchase price, we'll say that was the price. We did negotiate lower. Closing costs, we'll just say $6,000. We're not doing any renovation. Rent, let's start off long-term rental and then we'll go to short-term. So rent, before this, again, I looked at some of the comparables for rent, landed at $3,500 for a reasonable monthly rent for this property. Vacancy rate 5%. Great. Property tax, got all that. Management fee 8%. That sounds about right. Okay. Moving on, convention, down a lot of times with investment properties. 5% will change that. A little high here. Save that as a draft and we'll come in here, check out the rates, refresh this, make sure current, good. Conventional 6.73. Again, for the, we'll resume our property here. For the investment properties, it's going to be generally higher. Let's just move it to 7. Okay. All right. We'll go next. All right. There we are. Here's our property here. Week. Okay. Let's break it down. So some of the numbers in here are the ones you want to look at, the highlighted ones. Another obvious big one is the annual cash flow, negative 2,320. Okay, let's look here. DSCR, if you're doing some sort of DSCR loan, generally you're going to want 1.2 to 1.25 in that range. It depends on your lender. Okay. So let's go ahead and check out the risk radar. This exact stuff we just talked about here, the low DSCR, negative annual cash flow, financing risk. Yep. All right. Now let's play around with some scenarios here. So like I had said in the beginning, we didn't negotiate the price there. Let's say we get it down too low at 400 here. Let's say we got it down at 400 here. Let's say we're managing it ourselves. No management fee there. Okay. And then maybe I'm a little low on the rent. We'll just move it up slightly here, 46. All right. All of a sudden it starts looking good here. So you can kind of play around to see where you want to hit. So now we're at 6,600 annual cash flow. It's a fair deal. Cash invested, 106,000. That's the down payment and the closing costs, etc. DSCR, you're in that range again. So all of a sudden this starts looking good. So annual cash flow, 6,600. Let's remember that, okay? All right, so let's back out of this here and we're gonna do the same thing, same property with short term. So same data, we're keeping everything there, apply to the form, next, $6,000. And we're going to go short-term rental. So this changes a bit. Now we're going to go per day. So again, before I did this video, I looked at sort of that per day for the property type, the comparables there. What we're looking at conservatively would probably be about $325 a night. Other income, no. Vacancy rate, okay. This is going to change a lot. Generally, Airbnbs, you're not going to see 5%. I would estimate probably around, I don't know, 65, 70% occupied. So let's just go 30% vacancy on that. I don't really know the market there. That might be high. I gotta imagine it's not a super seasonal market. Being Florida, the weather is always good. You can always go there, except for hurricane season, but 30%, okay. Property tax, that all stays the same. Maintenance and management fee, this is gonna change a lot here, okay? So 8%, sort of on that lower for the long term. you can see up to 25%. I've even seen some people ask for 30% on the Airbnb short-term rental management. For the sake of this, let's go 20% on that. So that's a big chunk there. Okay, so we'll go next. Financing, we'll do the same financing. We'll go 25, and what do we do here? 7%. Okay, everything's good there. All right, here we go. Here is our long-term rental, or our short-term rental, excuse me. All right, so cash invested, about the same there. Annual cash flow, now we're looking at 20,000 versus if we were looking at the one here, we were at -2, or if we had saved that scenario, I think it was at 6,000, 6,600. Okay, so you're gonna be making more money on this one by a long shot. So let's play with some of the numbers here again. Okay, purchase price, again, it's already a good deal. So, it's just going to make it better if we change these. But let's actually stress test this, okay? So what we can do is go into a recession test. And if we're in a moderate, so say tourism dries up a little bit, you can kind of see how these changes. So mild, annual cash flow of 12 grand, moderate 3, severe, yikes, now we're in a bit of a stress zone here. So if tourism totally dries up, then you're in a bit of an issue. So this kind of brings us to the good and the bad of short-term and long-term rentals. Long-term rentals, you're going to get that stability. So it's, you're not going to have to worry about so much vacancy. It's a lot less ebb and flow. That can give you a lot of peace of mind. It's a lot less work with the check-ins, check-outs, the cleaning, all that. So all those things can add up to being a little bit more of a headache. I've also heard plenty of horror stories about people going in and trashing the short-term rental. That being said, I've heard the exact same for long-term, but you can have a bit more of a background check to interview, that type of thing. So it gives you a little bit more peace of mind and puts you a little less at risk, I would say. So those are kind of the ups and downs with short-term versus long-term rental. Long-term rental, you're going to see less cash flow. That's just how it's going to be, but you're going to get a little more stability, probably a little bit more security with that. With this, it's a little more short-term, it's a little more volatile. You're going to make a lot more, but it could be a lot more of a headache. So kind of give and take on what you are looking for with that. So hopefully that clarifies things for you. I'm going to link the calculators down below. One more thing I should mention here. If you're wanting to do something free and quick and easy, these are also free, but easy Airbnb calculator, I'll link this down below. Just some simple stats. You can plug them in and get the numbers. Same with the rental property calculator. You can plug those in and get those numbers as well. I'll link everything below. Please leave a comment if you have any questions or reach out directly. Thank you.